Afternoon, it's Quant Trade Edge with the daily trade wrap up for Monday, April 25th, and homework for Tuesday, April 26th. This morning in the special update, we mentioned that there was a 30-minute U-turn on natural gas, and natural gas had gone down to a very key support level around 646, 647. This is the general structure of that U-turn here. We had an A, B, C. This is a higher low. And when we took that out, we had this thrust up here. If you take it down to a lower time frame, it gave you the perfect way to exit as well, because on the 5-minute chart, it was a very clean 2 legs up on the Gann bar count. So, as soon as you broke below this, that was time to get out of this if you hadn't already hit the target you were going for. In this case, with the structure that we had here, this, bar here was about a nickel. So between there and here, okay, maybe about 6 cents. So 24 cents above that would have been 88. Didn't quite get 4R, got about 3R on this move, but this would trump, going for a static target. Then later in the day, it continued to compress, and basically you ended up with a VCP pattern. If you look at it as this being the cup, and then a bunch of higher lows, 1 higher low, 2 higher lows, 3 higher lows, 4 higher lows, 5 higher lows, finally 6 higher lows. And if we put our ATR 3 divided by ATR 20, I now have it as a little dot that shows up on the bar itself. Then you can notice that this entire area had contraction. So when we broke out from this area, and I think at the time I was looking at a 5-minute chart, I was looking at this right here. This was a great breakout to catch with a very tight stop. And between a breakout here and a stop here, you made let me double check. 5. Yep, you made 4R on that, and it's still going. So that's some people would just hold this all day long if they had this bullish longer term view. I much prefer to cleanly get out when the structure tells me, and then cleanly get back in when there's another pattern. In this case, it was the 15-minute VCP pattern. After that, let's look at crude oil. Crude oil had been weak all morning long. And if you look from the beginning, and I'll take off the vol compression for a second, and let's just focus on the bars. This is midnight. So we went down, we had 1 leg up. We went down, we had 2 legs up. And really, that 2 legs up would have served as a ABC pattern to get short. And this time in the morning, I was unsure of how things were going to play out, so that I wasn't ready to take that. But then observing further throughout the day, you see that we got a 1-leg pattern, we got a 1-leg pattern, we got a 1-leg pattern, and then this was the first 2-legged pattern that we got after that one in the morning. There was something missing here. This is a... Oh, you know what this is? That was July crude. I'm looking at June crude, so it looks like they were slightly different, the contract months. This is what I was looking at on June crude, and that made this a U-turn. And very little heat. This U-turn, 97.45, 96, that's about 60, 70 cents. So 280 off of this would have been $100.40. We didn't quite get there. At least not yet. We've got about 2R in this trade. Not bad for an afternoon U-turn. Then the other thing that worked well was GDX, the gold miners. What do we have here? Volume spike. The gold miners ETF. If we go back to a daily, on a 2-period RSI, we've had one. This reading was 2.5, so we've had 1, 2, 3 days with a reading below RSI2 less than 5. And just to put context on this, this is a market that's actually in a bull trend, and we are still above the 200 simple moving average. Gold miner stocks. So in an uptrend, we've got this extreme oversold reading. And what do we do with that now? Well, we can take it down to a 15-minute, and this is what I've referred to as the RSU pattern. And on the RSU pattern, you look for the first pierce above RSI 14 greater than 30 from before 30, and that's this one. Then it dips back down below, so you reset. Then this one closed above 30, and this closed above the high of this bar. So basically your buy point, blow this up so you can see it. Your buy point is the close of this bar, 35.41, and your stop is a tick below here, 35.10. So you have about a 30-cent stop. And this 35.42, 35.41 has gone 35.87. So you've got about 1.5 R on it right now. But again, our goal is to catch a longer-term reward with a shorter-term risk. And what we're trying to do is catch the longer-term daily reward of maybe a bounce back up to here, 37.75. It looks like a reasonable spot. And to be able to do that with just 30 cents of risk would be great. Now, sometimes this happens early in the morning and you get the move all within one day. Sometimes it takes a couple of days, and if it takes a couple of days, the one thing you have to be careful of is on the opening bar can be anything, and it really doesn't mean much. So you got to be careful managing your stops if you stay in it. I tend to use in-the-money call options to help, one, to get some leverage, but then to also just be able to ride out some of that little bit of noise that you may get around an open. So that was the other thing that we found. And now, if we look towards tomorrow, the best thing that I have setting up for tomorrow is natural gas. And we like natural gas because we had this 2-period RSI divergence. We stopped at really good support, and we have a really strong green candle. So if we were to take out that high, I would look for the 4R trade in natural gas. My second favorite thing is the indices, but in particular the Russell. And I'll show you what all the indices look like. This is the S&P, and of course we don't know where it's going to close. It looks good in that we have 2 down days and an RSI flip, as does NASDAQ. NASDAQ looks very similar with maybe a little bit less relative strength on the daily, 2 PF3s down and an RSI flip. And then let me tell you why I like the Russell better than both of those. So like the NASDAQ, we have 2 PF3s down and an RSI flip. But what I like is that today we went and trapped. We went and pierced below this previous swing low and then popped back above it. And that's a trap of sorts. So this one's going to be my favorite one for the Forex trade tomorrow among the indices. And then crude, this is going in order of favorite. So gas is my favorite. Second would be the indices, in particular the Russell. Third is crude oil, and the one thing I don't like about this is we don't have an ROC flip yet. And we know we do have a 2-legged pattern. That part about it's nice. We did hold this low here, so there are some positives. But ideally, I get busy with one of the other two, and I'm not messing around in crude. And then below that even is the Australian dollar. And let me show you why. So the Australian dollar broke this trend line, so there isn't a whole lot that's pretty about it. What is interesting is, we have the Taylor rhythm. We have 2 days down and an ROC flip, and we do have a trap up against this previous swing low. So assuming we can close above that, I'll give it a shot, and especially since the 240-minute has a P1 pattern. So that's something that I'm keeping an eye on. And you can see the history of P1 patterns here. There was one back here on the 15th of March that looked like it worked out pretty well. We had one here that didn't trigger above there, didn't trigger. Then we had one here that went and made a lower low. It's kind of a late trigger. I wouldn't really call that a good pattern because you want it to trigger relatively fast. But that's, probably the only reason I'm giving it the benefit of the doubt. But then you still have a long way to go before you get a 4X pattern. You'd want this to get above 72.55. And so especially if this closes with this much red, it may not be one of my more favored things to do. But those are my thoughts. Stay nimble. There's plenty of opportunities. Just be patient for them. And, stay safe in this volatile environment. Again, if you have any questions, drop me a comment. Happy to answer them. And please hit the like button. It's free, and it really helps the algorithm push this out to more people. Have a good rest of the day.